I think it's time that you and I takes a look at Meta. There's a lot of interesting things about Facebook and its future, and there's also a whole lot of fear out there. Getting banned from Europe and this and that, but today we are going to look at Facebook's fundamentals, the fundamentals of the business, and determine if this is a good investment. Fingers crossed it is, because I just bought some shares just like 5 minutes ago here. Facebook has been completely devastated since its Q1 results, where they came out with some disappointing guidance about the future, where they basically informed investors that Facebook is probably not going to have the amount of growth that investors had grown used to, which is like 40% revenue growth year over year. They said that this is probably over and we are heading into a new era for Facebook. They are into this whole new metaverse. They're not getting as many new users on their platform, which actually isn't a problem at all, because well, they already got like 3 billion people on their platforms. And if you take like the demographic that we're actually looking at for potential Facebook or Messenger users, then we're probably not laying at like 2-year-olds or like 85-year-olds. And there's also a percentage of the world that haven't got internet. Basically, they kind of already have their total addressable market under app, which is, people think it's a bad thing, but they legitimately have the whole world using their apps, their platforms. So let's look at the fundamentals here of Facebook first. So we can see that their market cap has basically, it was almost dropped in half a couple of weeks ago, but it is now $600 billion market cap, which means that, well, we're looking at a mega cap. It's a well-known, well-respected business. Also, probably the most important thing, how much growth can we expect from Facebook now that it's, $600 billion. Well, if it has to double, if your money has to double, your stock price has to double, and then the market cap has to double. Revenue of 117 billion and net income of 40 billion. They're laying at a PE ratio of only 16, which is crazy. That is their market cap divided by their earnings. So the PE ratio tells us about the future growth expected for a company. And oftentimes, as value investors, we seek companies under a 20 PE. But that is really far off, because if you have a company that has been growing like 50% year over year revenue and earnings the past like a couple of years, and they're looking to do that in the future as well, then of course, we can demand a higher price for that company. But it's like after investors heard these news that, well, we are probably not looking at 40% year over year revenue growth. We are more likely looking at like 13 or 15% revenue growth. When investors heard this, they like completely flipped out and then just oversold the stock completely. So it's down to like, if you look at companies, if you look at other companies with this type of PE, they're growing like 4% revenue growth, 4% at most revenue growth year over year. And I would argue that Facebook is, a step further than that. So, that is the price to earnings. The 5-year PE has been 25, an average 25. Profit margin incredibly high because it's a software business. They have incredible cash flow here of $40 billion, and well, they don't pay out a dividends, it looks like here, but incredible cash flow from this business, and that is because their advertising, it's just generating so much cash for them. So we look at this 5-year return on invested capital to see how good a company is at deploying their capital and actually making a return on that money that you invest. And over the past 5 years, this has been an average 15.5, which is high. We want it to be greater than 9 usually, so it's much higher. And the past year it has also been 25.9, so even higher than that. So looking pretty good here, and we can see the 52-week high has been $384, and the 52-week low has been 185, and we're a little bit over. We're like 20% over the 52-week low. We're very beaten down. The stock has been very beaten down, which honestly, which is just insane. So look at the revenue growth here, guys. We have 40 billion 5 years ago. Now 117, almost 118 billion dollars in revenue. Crazy. Also, we want to see their shares outstanding either decreasing or staying the same. And we can see here, if we go back 5 years, it was 2.9 billion shares, and now they have 2.82 billion shares. So basically, they have decreased the amount of shares, check mark there. We want to see them not being overloaded with debt. With 48 billion in cash and almost 100 billion in long-term assets, that will easily cover their long-term liabilities of only 19 billion. Also, they could pay off their total all of their debt. They could pay off all of their debt and even more with their cash that they currently have on their hands. So it's an incredible financial position that Facebook is in, which of course you also have to pay for things like for things like that. When a company has incredible amounts of cash on hand, when they are in a good financial position, when they have more expected growth ahead of them, when they are good at using their capital, they're generating a lot of return on the capital that you invest. All of these factors are factors that should increase the premium that you pay for a company. But it seems like for Facebook, they got high return on invested capital. They're good at using their investors' provided capital, and they have a great financial position, and they have reasonable growth expected. And still they're trading at an insanely low price to earnings, and just, yeah. So, and here, 5 years ago, they did $17.5 billion in free cash flow. That is now up to almost $40 billion in free cash flow. A double here with the cash flow in the past 5 years. Massive, massive check mark. So here are the 5 pillars all taken out for you. Here you can see we have a high return on invested capital over the past 5 years. We have revenue growth over the past 5 years. We have net income growth over the past 5 years. We have shares outstanding decreasing with 4% over the past 5 years. We have long-term liabilities divided by 5-year free cash flow is less than 5, actually less than 1. So incredibly good financial position that they're in. Cash flow growth, massive cash flow growth over the past 5 years, over a double. And we have and then we have 2 axes here, right? And these are the value indicators. They have to do with the price to earnings ratio being less than 22.5, the 5-year price to earnings ratio, but that is 16 now. So I would argue that this would be a check as well. And the price to free cash flow is apparently also a bit high. But does this mean that I'm not going to buy the stock? Well, apparently no, because I just bought it. But, well, there are other factors that play in. Again, you pay premiums for things like return on invested capital and future growth and financial position. Those are some of the things that you pay an extra premium for. So what we do now is we go into the stock analyzer tool and put in our assumptions about the future. We have future growth, their future PEs, all these things, and then we get a price that we should be paying for Facebook. And for the revenue growth, you can see here over the past 10 years, we have an average 41.7% revenue growth year over year. That is just mind-blowing, right? But it's because like 10 years ago, well, Facebook or Meta, it was a tiny company, not a tiny company, but a much smaller company, and they have of course done very well. So we can't expect them to do these kinds of returns. They have also said that in the meeting themselves. Just to show you the kind of great investment we're looking at here with Facebook, I'm going to put in like really conservative assumptions, because we don't even have to get into the metaverse and the possibilities there, the like amount of possible monetization they can just do with that. Right now it's just ads that they make their money off pretty much. They have endless ways to monetize the metaverse, and if they win the metaverse, they get people to use their type of metaverse, well, that could be a complete game changer for the company. So I'm going to go conservative. Just imagine that, well, they don't expand their user base. They just keep on basically making more money per user. I think they make about $40 per user. And like 5 years ago or something, they made like $6 per user or something. So they have been able to monetize their audience a lot better. So if they can continue to monetize their users in a better way, right? They have now made the marketplace. That is something new that pretty much everyone uses nowadays, right? And they're making money off of that. They didn't have that like 10 years ago. So things they are constantly adding things to increase their value, the value that each user provides, which means, well, we don't have to have this insane user growth that I've seen. So what I'm going to do here is I'm going to do and 12, 6, 9, and 12. And for the profit margin, that has been pretty stable. So I'm just going to go like, and then the PE ratio. Well, when the company gets even bigger, they can't demand as high of a PE ratio. So what I'm going to do here is put in 16 and 18. And for the desired annual return, I will put in 12.5%. And this is because this is our margin of safety, the 12.5% annual return. Guys, the S&P 500 has over the past century generated an average 10.5% annual return. So when you go ahead and do the extra effort to go ahead and invest in individual companies, you want to make sure that you're actually also making a bit more money than you could just do with then investing in an ETF. We can see here that we have a high price of, almost pretty much what it was before the crash here with $362. We have a mid of $265, and we have a low here of around $200. So it has actually been below the low here. But basically, what this means is if you believe in these mid assumptions here, then you should be paying $274 per share, or somewhere between these two numbers here, for your shares. And if these things come true, well, then you will get an annualized return of 12.5%. So right now it just looks like a buy to me, because I don't believe in these numbers personally. I believe more in, like, to be honest, I think they can trade at an 18 PE. So when I look at Meta from my point of view, I see a clear buy right now, with the assumptions that I make and that I feel comfortable with, and the margin of safety that I feel comfortable with. This is just a buy for me. So I just started buying today, and I think that Facebook would be like around a 10 or 15% of my portfolio, and that is just how I like to invest. Because my portfolio isn't humongous, because I'm 15 years old, I like to take some pretty large positions in the companies that I find interesting. So right now this is about like 5% of my portfolio with the trade that I just made today, and I'm going to keep adding like a couple more times if it stays in this range or if it drops. But I don't want to put in I don't want to take in my entire position all at once. What I would recommend you do now is go ahead and make your own research about Facebook, watch some more videos and do your own research and make your own price target for what you feel comfortable with. It might be $200 a share that you feel comfortable with. Then set an alert for that price and then buy it when it gets under there. So do whatever you feel comfortable with. I'm just saying, for the assumptions that I believe in, which I believe are very conservative, I think that this is just a huge buy right now. I'm going to keep building up my position until I'm happy with it, and then I'm going to delete it from my watch list and just let it sit there. Just let it sit and don't even look at it. And then if I hear something in the news with like Facebook being delisted from Europe or like banned from Europe or something, then I'll go in and check and see, oh well, I'm down 50%, now I'm going to buy some more. That is the type of investor that I would like to be. I don't know if I'm that type of person yet, but that is the person I strive to become. So yeah, if you like this video, then make sure that you subscribe to my YouTube channel. Here I post videos on all sorts of companies that I find great value in. And yeah, go and follow me on Instagram here. And I'll hope to see you in my next video. Have a great rest of your day. Bye bye.